This is the Chicks of FinTwit, a finance podcast by women for everyone. I am your host, Caitlin Cook. Join me as I highlight female trailblazers and their male allies across the industry as each shares their expertise on a variety of finance topics. Nothing is off limits. Thanks for joining us. Now please enjoy this episode.
All opinions expressed by Caitlin Cook and the Chicks of FinTwit podcast guests are solely their own opinions and do not reflect the opinions of the host or any of their affiliates. This podcast is for informational purposes only, is not investment advice, and should not be relied upon for any investment decisions. We are not recommending any securities, nor is this an offer or sale of a security.
Hello and welcome to the Chicks of FinTwit podcast, a finance podcast by women for everyone. I'm your host, Caitlin Cook, otherwise known as Dead Kate Bounce on Twitter. And if I know anything right now, it's probably what you're all thinking. And it is that my guest today is in fact not a chick. But if you've been along with us for a while, you'll probably remember in my pilot episode that the podcast was created to highlight amazing women, which will always be the focus, as well as male allies, quote unquote, men in finance and tech, promoting equity, inclusion, overall engagement in the industry in one way or another. And one of the areas of interest for me in particular is, fractionalized ownership and allowing for lower dollar amount investments, and as well as alternatives, which just two areas of interest for me: art, blue chip NFTs, Birkins, other collectibles. When I think of them historically, I've really associated them with the wealthy, right? So when there's a product that comes to market that really brings together access to that market at lower dollar amounts through fractionalized ownership, I'm all over it. And no one better to talk about that with than today's guest, who is Rob Petrozzo, co-founder and chief product officer of Rally Road. Rob, welcome to the podcast.
Thank you. Thank you for having me. I'm honored to be the first non-chick on the podcast and to meet the person who I really do believe, even before I knew you, had the best handle on Twitter by far. It's not even close. So I'm glad to put a face to the name.
Oh, thank you. I'm going to put that quote in my Twitter bio just for the endorsement, not an ad. But lots of things I want to talk about today. But I do think, obviously for those listening, always start off with a bit of background on you and how you got to what you're building today, just to kind of start things off here.
Yeah. So I've been kind of a designer my whole life, and design and finance have really become two worlds that intersect, whether you want them to or not, over the last 4 or 5 years, I would say, give or take, since we started Rally. But really, I came out of school with a design degree and I wanted to be an artist, and I thought that was going to be my future. But then technology kind of took over. So I was working in music for a little while. I was working in tangible products like designing clothing and packaging and the stuff that you do when you're kind of a designer coming out of school in the mid 2000s. And then, when the iPhone came out, it kind of changed everything. And now everybody was a user experience design. And in my opinion, there was no more kind of fractured user experience than there was in trading stocks and in finance at that point. So everyone kind of had an E-Trade account or had a TD Ameritrade account, which is what I have and I still use to this day because I'm super old now. So that's what you use when you're old. But before Robinhood, obviously. But I was working at a bunch of startups. I was at consumer startups. I was at enterprise startups. I was doing creative direction, building individual pieces of the product, doing roadmap stuff. And then myself, my two co-founders, Max and Chris, we've known each other for a long time. I was in design. Chris was an operator, and he really understood how to build businesses. Max was in finance, working at Barclays and doing private placement deals forever. We saw this kind of gap where there were all these things that we loved and that we wanted, but the prices had gotten crazy. And that was every type of collectible, from classic cars to baseball cards to Birkin bags and some of the stuff that you mentioned, things that are looked at by the wealthy as assets that you want to invest in, but they're just not accessible from a price point or from just literally getting access to them at retail for any regular investor. So we looked at it we could design something that kind of looked and felt like a consumer app and felt like a marketplace that you would typically use for discretionary, but make that something for finance and build towards getting real equity and real access to those assets, that we could probably have a product and probably have something really, really, really unique and new. So that was where the concept of fractionalization, working with our legal team to sort of set up the structure that we do it in now, where they're real sort of securities and they're investable at a fractional sort of low value, and then sort of creating a marketplace that facilitates the trades that go along with that. So that was 2015. We kind of all left our jobs and said this was going to be what we do for a living. And now, 5-6 years later, it's an actual business. And all of a sudden there's a bunch of employees and headquarters and real things that are going on that made it real.
Love all of that. I guess the first question kind of as a follow-up is why collectibles? Why alts, if anything? I feel like there's so many, especially product-wise within financial services and like retail facing apps and different things that have come up. It's just everywhere. So why did you focus in on that in particular? I don't think I've seen a lot of products specifically catering to that.
Yeah, I mean, if you know it, like fintech is this weird thing that finds its way into every sort of like corner of culture and of conversation and everything now. And I think that we've always looked at it like now it's kind of understood fractionalization and investing in collectibles and having like things from childhood that are now worth a lot of money is kind of obvious to everybody now. But when we started this, it was more along the lines of like, what are the things I care about? You know, what are my aspirational goals? What are the things that I have an emotional attachment to? And we started realizing that all those things were really, really, really valuable. And not just from a I care about them standpoint or nostalgia standpoint, they were really valuable. Literally, you were seeing auction results that were going crazy. And when we started, it was classic cars was the first asset class. And that was one that had like these new $1 million auction results like every week at one point. And it's like, damn, those really got away from us. And that's the one of the thing, like we realized it was so over-indexed in conversation, but it was so under-indexed in portfolios that it was really the path of least resistance, but it also was the things that we really cared about. It was hard to find a new niche inside of fintech that hadn't already been done, whether it was ETFs and index funds or whether it was like bonds. There were all these kind of little derivative products that were coming out, but no one was taking the things that the majority of people really care about, that they talk about nonstop, that's in their group chats, that's being emailed around, that's showing up on like BuzzFeed and listicle articles, and turning that into an investment worthy asset class and an investable asset class. So that for us was like this mix of the things we cared about. We didn't have access to it. Everybody's talking about it. How is there not a product that exists like that yet? And that became the birth of what Rally became.
Awesome. And I guess I have to ask too, from like a demand standpoint, I feel like historically with a lot of collectibles, you mentioned cars and, you know, like fine art and whatnot. I feel like a lot of the time when people collect those, it's more having it on display and having that physical object that you can show off to people, sort of flex on, right? For whatever you want to do with it. But how have you seen the demand side of people who just want ownership in the investment aspect of it without actually having ownership of the product itself, if that makes sense?
Yeah, I think, you know, part of us, you always need a little bit of luck for like a business to have any success and to get to a point that, you know, you raise a bunch of rounds of financing and hundreds of thousands of users and people start to recognize the brand a little bit. We're kind of in that space now, but that's really, you know, only because these had this mix of financial returns and emotional returns. I think what we've always seen from a demand side is that people come to Rally because they recognize the individual assets, and it's always word of mouth. It's always been done really well for us. Like we do a little bit of paid social, but there's really no true marketing function here other than word of mouth for us. And that's been really helpful because what you have is these communities that are formed around individual assets or asset classes. So like video games and vintage video games is a collectible space that really kind of took shape and became way more real in the last 12 to 18 months, I would say. And one of the assets that we actually set a record, we sold this original Mario Brothers that was really high graded, still sealed. It was a $2 million exit off the platform that all the investors voted on. And it became this big sort of press piece and everyone started looking at it. And it was very polarizing. It was like, how is that? That's not a collectible. Other people saying, how is it not a collectible? But then you start looking at the numbers and you think about things like rookie cards that have been around forever. And there's lots of them in some cases, 10,000, 20,000. Some of them are $100,000 cards, even at that quantity. With something like video games, it's a niche to a lot of people, but there's a group that really pays attention to vintage video games and loves it. And they know what this really means to them emotionally, but they know what it means from a rarity standpoint too. There were 40 million Mario Brothers games printed. There's probably 200 or 300 that are still sealed because realistically, like you had to be a maniac to get that game on like Christmas morning and not rip it open and play it with your friends. So the group that understands what that rarity is, understands and has that emotional connection to it, and now is starting to see prices, they've always understood how important an original Mario Brothers in sealed condition is. The broader market didn't really know, I don't think, until we kind of brought it out. Heritage was doing auctions around it. A lot of people started paying attention last year, but all of those hit that number where it's like rarity, emotional connection, distribution, where everybody knows that name, a franchise that's relevant now will be relevant in the future. We look at all of those as potential investments. And I think the demand has followed where it starts with that small group. They'll come to Rally, find that thing they really understand and care about. Then they start to diversify and treat it more like a financial instrument after that.
Yeah. And to your point, I feel like I'm sure a lot of the people that you get, it's more of just like sentimental value for some of these products that you have. And I think it's almost secondary, the investment side of it, but so many collectibles have done really, really well return wise. I think about Birkin bags, right? I'm pretty sure, I can't remember the stat now, you'd probably know it better than me, but just like outperforming the S&P Birkin bags. People would never think about that. And they'd more so think of it as just an expensive purse that they can't afford. But when you look at it as an investment vehicle, most people probably hadn't until they got to your platform. And I'm assuming it's like that with a lot of the different, investments that you have available there.
Yeah, Birkin bags are a really good example. It's the stat that was always published between it was something like between 1985 and I forget when. It was 35 years of up years, basically, of never having gone down 35 years straight. And there's assets like that. And this is never investment advice, by the way. I have to make sure I say that as many times as possible when I'm talking about price. But there are certain things that are put on this pedestal where it's the heirloom piece of an individual category. Certain Birkin bags are like that. The Faubergs and the ones that we have on Rally, where they're like one of 50s and one of 100s, and the allocation and the story behind how you get it is so ridiculous. And then there's things like a little more recognizable to a broader market, where it's like a Mickey Mantle rookie card, which since 1952 has also never had a down year at auction. And those are things that there's so few. The stories behind them are so unique. There's always a moment in between, like when they came out to now, where a bunch were destroyed or lost. Like there are these elements of story that go along with investment worthiness that are part of every one of these assets. So when you also start to factor in like the numbers that people look at more now, where outperform the S&P or has done better than crypto over year, all these elements that kind of speak to it as a true investment, that's when you get people who have always paid attention to it and have always over-indexed it in conversation, thinking about it as a place to put their money. And that's what changed dramatically, I think, since COVID in particular to now.
So two questions specific to Rally, hopefully go together here, but what are the products that you have or the investments that you have available on the platform today from where you started at? And then how does it work logistically speaking, right? How do you go about going and like purchasing a Birkin bag or purchasing an antique car or something like that, so you can put it out on the marketplace for other people to invest in?
Yeah. So I'll start with the category. So we started with classic cars, and that was something that, again, like very underserved market in terms of allowing people to get equity access to the things that they really knew were valuable and that they really cared about. That opened the door for where we're now in almost a little over 20 individual asset classes. So those categories were everything from classic cars, where we started, Birkin bags, wine and whiskey, collectible technology, which has been a huge sort of source of new users and growth for us around like vintage Apple products, dinosaur fossils, meteorites, sealed toys, blue chip NFTs. So anything where there's an enthusiast group and people that really care about it, but a disconnect because the prices have gotten so crazy that a regular person can't put money in, we allow them to make that investment at around $10 per share. In terms of the way it all works and where we find these, like, now a lot of it's inbound, but we have an in-house team that uses this data-driven method to evaluate literally thousands of individual assets a week. And we always take into account factors like historical appreciation and rarity and provenance and the story behind it. But we're also tracking cultural relevance and the significance of that individual asset or the franchise just as closely, because we want to make sure that something's important now, but it's going to be important in the future. And we truly believe in every one of these asset classes, obviously. So we take a small position in each of these assets that we buy at the same price you do. We can't sell in the secondary market. But once we have that asset securitized, we run it through this process of approving it as a Reg A plus offering with the SEC, which qualifies each individual offering. Then we open up our version of an IPO. It fills with investors. It's got its market cap. It's got its share price. It has a bunch of investors that get in, anywhere from 400 to 4,000 or 5,000 investors in an individual asset. There's a short lockup period, and then it trades on our secondary market through bid-ask, through registered broker dealers. So we try and create all the dynamics of a true sort of full circle investment vehicle and allow you to kind of pick and choose individual assets as opposed to having to buy baskets or indexes of products. And then we always do our best to tell those stories along the way and make sure that, anything that's happening in like the Birkin bag space, for example, there's a big auction result, or there's something that happens in pop culture that's really relevant, something as basic as like a big sale, or like, Kanye buys his girlfriend and all of her friends Birkins. All that stuff is relevant information to our investors. So we make sure that's in front of them throughout the life cycle of that asset too.
So how does it work in terms of, maybe a weird question, but like quality control, for those investments? And they're physical objects in most cases, other than maybe like the NFTs. I think I've maybe seen, even you mentioned a museum for some of those as well. Is that kind of where they're stored?
Yeah, so we have a purpose-built facility that we have on the East Coast where we store everything. It's basically like a vault, and that's like a 24/7, always monitored, always maintained, insured, all the things you would expect from like high value assets. But also we want to make sure these are always accessible too. So we have our first museum space here in Soho, which is right below our HQ on Lafayette Street. We're moving to a much bigger space on Broadway and Howard. We'll be there in the next, probably in 2 months, give or take, right before the summer kicks off. But really bringing these to light and making sure people understand these stories and how important they actually are is a huge part of our business too, because as much as it's an investment platform and an investment app, in reality, it's a living museum. We want it to be something where anyone can come into the app, learn more about an individual asset. If there's a collector that wants to buy out and sort of make that hostile takeover offer to take possession of it, we want to make sure they have access to see all those assets individually. Doing that in our own museum space, partnering and doing pop-ups around the country and going to the places where our investors are is a big part of that too. So for the last year and a half or so, we maintained our small museum here. It was kind of a beta test where we have it on a really high traffic block in Soho. We had regular retail hours. Anyone could come in, and we wanted to kind of see what the reaction from the crowd was going to be. And the question that we would always get when someone walked in the first time would be like, what is this? So you walk into a space and there's, a vintage Aston Martin in the middle of the space. There's Mickey Mantle's rookie card. There's a jersey that Michael Jordan played in the playoffs in. There's, one of the rarest Birkin bags in the world. There's bottles of wine that haven't been opened in 100 years. All those things create this like story that you could leave with. And the more interested people are, kind of the more we knew we were onto the right pathway of making sure that these individual pieces were available and that we could tell the stories. Because to your point, I think a lot of people didn't know they existed as investments or existed at all. And when we kind of tell those stories, you see that people would walk into these spaces and like their eyes light up and they stay for like a half hour and we're having a full conversation about what this all means. And they kind of leave as like an investor on Rally. That was always the goal. So we're going to be doing way more of that throughout 2022 into 2023.
In terms of demand, I guess, right? So I would assume that this definitely appeals to sort of a different demographic than we've seen historically in terms of like traditional markets, if I had to guess. But in terms of demand, where are you seeing the most of that coming from? Are there certain groups that you've seen really gravitating to this more than others?
Yeah, I mean, the core persona, I guess, that we built it kind of thinking about ourselves. So when we started this, it was a mix of like, all right, we built this knowing where the gap was and knowing the things that we didn't have access to and the missed opportunities that we didn't have enough money to put money into to sort of really invest in. So let's find something similar. So we found that, 31-year-old tech empathetic, understands investment, but maybe has a 401k and isn't necessarily an active day trader, knows what crypto is, probably has a little bit of Bitcoin, Ethereum, but isn't necessarily into a million other coins right now. That evolved over time. So really it's like someone who's creatively curious, but also has the ability to sort of take $200 or $300 and put it into an investment like this and kind of see where it goes. So we've seen a lot of kind of like first time alternative asset investors, but also when you think about like the NFTs on Rally, and this too, like we're in tech and you're on Twitter and like we're in the conversation nonstop. That echo chamber is super dangerous. It makes you think that like everybody owns a CryptoPunk or owns a Bored Ape. That's obviously not the case. But it's also one of those situations where so many people are intimidated by that process of like to get an NFT, whether it's something that costs absolutely nothing or $100,000 one, buying Ethereum, transferring that to a MetaMask wallet, linking that wallet to OpenSea, making that first purchase, feeling secure in the investment and putting it to your wallet, not worrying about getting hacked. All the elements that go with that are these hurdles. So for us, when we started putting NFTs on Rally, a lot of people, it was something like a little over 80% of the investors in our first CryptoPunk on Rally, that was the first NFT they owned. And even now we do user interviews. You see that the majority of their exposure to NFTs is on Rally because we can transact through ACH. You go through a KYC process the same way you would on any brokerage app, and it's 2 clicks. And now it's kind of secure. And there's a third party who's also maintaining that in such a way that you don't have to worry about it being hacked, and it's insured the same way the other assets are. So that for us, like that layer of access is something that we've always wanted to make sure regular people have access. And when you just live on Twitter and you live in tech, those aren't regular people. Like it's a whole other world that even though they find their way to Rally, we really want this to be for everybody, for normal people who aren't necessarily, building startups or worrying about what Bored Ape floor prices look like right now. And we've been able to do that really effectively.
Yeah. And to your point, I think a huge part of adoption, whether it's, getting everyday people into alternatives and collectibles or getting people into NFTs and crypto, there needs to be more on-ramps, if you will, into that. And I feel like what you're doing with Rally definitely speaks to that. I was going to ask you if on the NFT side, if shares of that are priced in US dollars or was in crypto, but
those are all in US dollars. We always track kind of like what's happening with individual offers and demand outside of Rally, like what price, what floor prices are, and we publish a lot of that stuff in the app. At the same time, I think that I've always looked at NFTs and as any sort of token-based assets, the on-ramp to me, what opens up the masses for all of this is going to be like that. It's going to be a little bit of credit card, a little bit of debit and ACH. It's hard for someone who's crypto native to think about that as a solution. But I think what we've at least started to see is that a lot of these crypto solutions are trying to find problems that don't necessarily exist. So as interesting as all these spaces are, DAOs in particular, and some of the governance that goes along with the way crypto is being used, tokenization is being used, a lot of times it slowly works its way back to the exact same structure that exists outside of crypto. And the only sort of difference is that you're paying gas prices. And that's something that we want to avoid. And that's something that we've always been really diligent about in putting individual assets on Rally from the NFT space.
Yeah. And I think just to add to that too, when you're trying to get people into the space, it's hard seeing people who are crypto native, who have been in the space for 5 years, sort of bashing it, because if you really believe in the space and believe in adoption of it and seeing acceptance of it becoming more widespread and actually having it be like more ingrained in society, you sort of have to revert a little bit back to the mean and bring it to people in a way they understand, which I think makes people a little bit uncomfortable, right? Especially on Twitter, I always go back to, because to your point, huge echo chamber of people who have been doing this for years, don't want to hear any different. This is the way. And that's not really how you get a majority of people. It's like the learning curve is pretty steep, whether it's NFTs or anything else. So it's a necessary, I wouldn't even call it an evil, but it's just necessary. It's like a necessary part of the process, you know?
So true. It's like the most, like if I'm getting 1,000 likes on a tweet, it's probably because I said something that is taken the wrong way about crypto. It's we live in a crazy world, and it's also crazy times for crypto right now. Building for the future as opposed to the moment is way harder when you're all in on crypto, because it feels so prevalent and overwhelmingly relevant right now. And it feels like we have to jump into the future. You know what I mean? But to get there really does require bringing people with you. You can't bring everybody with you if you're trying to do it for the small group. We've always tried to think about the bigger group when we build.
Yeah. And it's such a process. Like nothing ever goes as quickly as people want it to, and they assume that it can because there's processes behind these things.
Yeah.
But sort of to the note of what you're doing with Rally. So I know you have NFTs on the platform now. I'm assuming that's probably something that'll continue, but how many IPOs have there been? And how do you, I know you said that there's kind of like an algorithm or something that you use to determine collectibles that you should bring onto the platform, but if you could explain that process a little bit more, I'd be interested to hear on that.
Yeah, there's always intuition that goes with that too. And I think we always want to let our users and our investors lead us in the right direction. So, with a few 100,000 people in one place at one time, when the volume starts to turn up on an individual asset class, we want to be sort of early to all of those parties. We want to make sure that we're sourcing the best quality assets, and curation is kind of one of our strong points. So for us, when something starts to get hot, we're not going to just jump in and say like, all right, we're buying every NFT project for the next 4 or 5 months and making sure that gets on Rally. We want to make sure that, again, it's going to stick around, that's relevant. I think it got pretty clear early that things like CryptoPunks, Bored Apes, and again, not investment advice, but they're around right now. They're going to stick around because they've entered the zeitgeist in such a way that it's relevance in franchise, not just in individual assets or prices. And I think that anytime we see something like that, for an NFT, that means it's in the conversation. That means that the distribution of that NFT, if there's 10,000 unique items, it's not 100 owners of those 10,000. We want to make sure that there's volume, that there's enough demand to support what we see right now and see in the future. But also we want to make sure it's cool. Like part of what we want to do is always bring the coolest stuff to individual investors. So, in 2021, we ran close to 200 individual IPOs, of which, now we have over 300 assets, just about 300 assets trading on our secondary market. We're going to grow the AUM to around 70 million. Like we're at a point that we can source great assets. It's on us to find and curate the best collections. And our investors tell us if that's right or not. And the secondary market will tell us whether it's right or not. I think that's a big part of 2022 for us too, is making sure that we're a big part of price transparency. So when you have a small group at auction buying the best assets, and instead of having 2 or 3 people dictate that price, we have 2,000 or 3,000 dictating that price. That to us is like a big goal for the rest of this year, is to ensure that the pricing mechanic and the liquidity on Rally really works to reprice these assets effectively.
For sure. And I want to dig into the platform a little bit more, but before that, in terms of just like trends, right? Like you're living this every single day. You're seeing where you started years ago and you've seen where it's gone. And I know that things kind of pop up with just like trends that come up and whatnot. So it's not entirely predictable. Maybe it is, but where do you see the future in terms of collectibles and anything on the alternative side other than, I know NFTs have been a really hot thing, but you do a lot more than that.
Yeah. I mean, it's weird because you have these assets, these kind of nascent assets that live below the trend line that have always had a huge enthusiast group. I think video games were a good example of that this year. I think what happened with trading cards during COVID and to now is a good example too, where like vintage, even to an 18 or 19-year-old became really interesting, even though it's players that were 2 generations before they were even born. It's become a thing where everybody has their thing. I think that's what changed dramatically in the last like half decade as well, is that anything in my mind that I see that's important should be an investable asset. I should be able to own equity in it. Some of those things are affordable enough where I could buy the whole thing and hold on to it. It has sentimental value or emotional value. If it goes up in price, that's great. Others are kind of set in such a way where the floor is kind of put in and they have these huge groups around them, but the general public doesn't necessarily know about them. And I could say that for video games and trading cards. I think what we're going to see more of is that the niche groups, things like furniture, for example, or investable technology and early Apple products starting to show its face this way this year. They've always been kind of like assets that find their way to auction and print huge numbers when one person or 2 people who really want it can get their hands on it. And it drives prices and it drives demand and it becomes it gets on people's radar. I think we're going to see more of what I look at as almost like subreddits of investing and of collectability, where if there's a group of 100 people that really, really care about something and only 100 of that asset exists, just from a supply demand position, that's something that's going to have collectability to that group and will expand. And I think that our ability to sort of share what we care about and to show other people what it actually means and tell that story, the information asymmetry changed so dramatically in the last 10 years too, that if I believe something's important and I have a big friend group or a big network and I could tell them like, this is why it's important and educate them a little bit on that asset, the collectability of that increases dramatically from where it would have 20 years ago when getting that information out was tough. So to me, it's like I walk down the street and I'm looking at like a watch on somebody and this other person has this bag and this new restaurant is opening. I'm thinking about it all as like, it would be nice to have money in that, or I would love to have some of that in my portfolio. I can't get away from it now. I think a lot of people are starting to come around the same way where they look at everything as collectible one way or another, whether it's digital or physical, and everything we've seen in the NFT space and with what companies like ours are doing is sort of bringing that to the forefront and making it more accessible.
So on the note of what you're all doing and making everything more accessible for people listening to this, I kind of want to dig in, your chief product officer, digging into the actual product itself, cultivating an experience that makes it easy for people to get onboarded to this. How does the actual platform work? How do people get onboarded to this? How do people interact with it? How does it work for, I guess, from like a business model standpoint? How do you guys operate and bring in money too? Is it similar to the traditional side in terms of like the fees that you collect and whatnot, business model wise?
To a certain degree, I think that we've always looked at it as, we want to earn our investors money before we kind of ask for it. So in the future, there will be a product that allows for sort of a second tier access to additional assets and the ability to sort of maybe do some syndicate investing. Like we have a lot of ideas on paper right now without giving too much a roadmap that allow us to sort of have a subscription or something associated with the platform that provides additional value for the investor. For us, like we're thinking about scaling this platform, making it as big as we know it can be right now. So for us, like buying and selling fractional equity in like these unique, often one of a kind assets is our strong suit. That's what we do best right now. We're going to continue doing that for the rest of this year for sure. And ensuring that we allow investors to purchase those shares very similar to the way that they invest in any other marketplace. Long term, there's all these ways for us to sort of think about this platform as a curation aspect, from an experience aspect, from doing more around those assets, allowing you to sort of, interact with those assets differently. All that's going to be part of the business model. But having started with, classic cars 5 years ago now, thinking about how like this big kind of like dirty, heavy piece of equipment, turning that into stock was like the first aha moment for us. And now it's about expanding into as many asset classes and getting as many people to care about it as possible, maintaining a really efficient liquid secondary market, and then trying to start thinking about how do we apply more value to this product that we're confident a lot of investors will pay for, because we've been in a situation that communication with those investors has always been front of mind. So we'll be ready to sort of release more of those products that earn money for this business outside of just the sourcing fee that we have right now and some of the merchandise that goes with it, to really create a better experience that everybody will be happy to be a part of.
So for people who are kind of buying shares on Rally and whatnot, I think about, you mentioned that, you know, different products, people could put in offers to purchase the entire thing, right? So in that event of like liquidation, if you will, I guess, or whatever you want to call that, if it's fractional ownership, how does it work from your end? If you do get an offer for a full product, you sell that, do some of the proceeds go to the people who are investing in that? Like, what's the process for, like, do the people who have partial ownership of the asset get a vote in whether that asset's sold? Like, what's the procedure around that?
Yeah. So anytime like offers come in often, and anytime that comes in, it's always qualified and that it's within fair market value, it's at a premium. It's done in such a way that the asset's available for sale. Like there are all these little elements that go with it. We make sure that the buyer is real and that the money's available. So once it's all qualified, the money goes into escrow. All the investors in that asset, they get an email and they get a notification that gives them a 48-hour sort of voting window. And we have a survey site set up where they cast their vote. All of that sort of gets aggregated. If it's more than 51%, it goes to our third-party advisory board, which is made up of a bunch of experts in the space. Our legal team, a bunch of people kind of sign off on it. And then once approved, the entire sort of on a pro rata basis, on a share weighted basis, the funds get distributed back to investors, and we don't take any additional take off of that or anything like that. We make sure that it gets distributed where it's a 1-for-1 back to your share. So if you own one share, your one share got bought at a 20% premium, you're getting that back into your account, and usually that's within around like a 5-day window, start to finish. So we try and make it as quick as possible for both the buyer and for the investors on the other side to get the process and the transaction done as fast and as seamless as possible.
What are the most, like, if you can speak to like the biggest success stories, I guess, of offers you've gotten on different products, best performing ones on the platform, not investment advice.
Yes, never investment advice. That's
never.
True.
But the ones that you've seen do the best, I mean, with all the different IPOs, I know there's like a bunch of different options for people to invest in, but what have you seen historically, not advice, that has performed?
Yeah. I appreciate all the qualification and disclaimers that go with that. Our lawyer's going to be really excited to hear that. So to give you like an example, in 2021, I think it was something like around 20 individual buyout offers got presented to investors. A lot of it came from comic books. I think that was a space that last year, you know, we were seeing a lot of activity around the space. It was kind of a growing asset class, a lot of demand that was coming from both the sports car market and new buyers at auction. And when you open Rally, that's like a real museum. You go in there, and if you didn't know any better and you just love comics, you'll see, you know, the grails that come from the number ones and like the first appearance of individual superheroes from these massive franchises. So we had a lot of interest in that space last year. The most recent that went out, like Superman number 14, sold at it was like 120% return from last trade. I think Daredevil number 1 was also one of those things where it was like a 70% gain since the initial offering earlier that year. We see stuff like that pretty often. We're also at a point now that in terms of the assets that we have, so many of them are one of one or one of very few, because we've curated such a great collection that, you know, we'll set world records a lot of times. So we had the most expensive tennis card ever bought was a Serena Williams rookie card, was on Rally. The most expensive video game ever sold wasn't a $2 million exit, which was a 1,200% return for investors over a year. Most recently, we sold the highest priced soccer card of all time, exited off Rally, was a Pele rookie card, which sold for $1.33 million. It was the first $1 million soccer card of any kind ever sold, and provided around 300% return for a lot of investors who came in recently even. So for us, like we never kind of speak to returns as a benchmark of why you should invest with Rally. For us, the way we look at it is that we're curating a collection of the most unique assets on earth. And in the event that somebody did want to buy it, someone with a big checkbook came in, want a physical possession of that actual asset, we like that they kind of have to go through Rally a lot of times for those. So we're putting the power back in the hands of these investors who a lot of times made really savvy decisions to come into an individual asset, knowing what they knew about that individual asset class, getting a little more education inside Rally. And even if it's $200 or $300, when you get somebody even the opportunity in those buyout surveys to say, like, you could sell right now for a 400% gain, having that opportunity is something that a lot of times you don't necessarily get in the public markets. You don't necessarily get in the crypto markets, and you don't get if you own the asset and put it in a private collection. So for us, creating that opportunity on both sides is the most important part. And we've seen really outsized returns come from a lot of those exits.
And I just keep thinking about, I know we talked about kind of like the fractionalization and the opportunity that offers to be able to buy something at a $10 a share you think of some of the stock prices these days is like over $1,000 a share, right? And fractionalization really opens up the ability for people to get access to that. So looking forward on your side of what you're doing at Rally, right? I mean, I'm guessing the answer is obviously a hopeful yes, but this really seems like something that could get a lot of people who may not have been interested in investing, who may not be super, well educated on that, to get involved in a way that's, in my opinion, a lot more interesting and a lot more interactive and more sentimental to, investing in things that they care about other than a publicly traded company.
No, I mean, that's you bet that's you must be in our branding conversations. We talk about that all the time. Like what we're trying to do is make it more interesting. And what happened was the investments that people really care about, the one that young people really care about. I'm using young people now. I feel so old saying that, but the investments that like someone under 30 thinks about, they got crazy. Like if you think about just Tesla, Amazon, even Bitcoin, even though you buy crypto fractionally, I think a lot of people still look at the price and they say like, I want to own one Bitcoin, or I want to own a full ETH, or they think about it in terms of like the whole thing. That for us was an opportunity too. It's like, here's that thing that has that qualifies in the same way, something you really care about, something you and everyone we're talking about. You don't necessarily have to come in and buy the whole thing. For $10, you could have as much exposure as you want and as you're comfortable with, and not feel stupid about it or be intimidated by it, or feel like you have to buy a share of Tesla or have to buy a share of Apple. Everyone gets stuck. Like, again, it's a tech thing. Like, yeah, $150 a share for a share of Apple is not that bad. For the majority of the world, it is. Like, to own 1 or 2 shares of Apple means like I'm making a decision right now to take money out of my monthly budget that I have for all the staples that I need in life to put into stock right now. I want to, but I can't. So anytime we could take something that people want and make it an I can, like that's a win for us. We want to keep doing that with every asset, whether it's $1 million asset or a $10,000 asset, as long as it's something that people really care about.
Amen. Yeah, no, anything that opens up the floodgates on getting more people involved is something I'm behind. So obviously why I wanted you on this podcast.
I appreciate
it. So question on, using like the Batman #1 1940 issue as an example, $10 IPO price, 180,000 shares. If that's like almost $2 million in proceeds, where do those proceeds go for you? Like within the business, like how are those assets used within Rally when you do a raise like that, if that makes sense?
Yeah. So that's a situation where that was purchased from a private seller who didn't necessarily want to go the auction route. And it's something where like that's paid for already. So that there'll be situations where we'll use our credit line, or we'll use, operating capital. If we see a really great deal, we can buy opportunistically. That met our criteria. We make a small sourcing fee off that. And that's something that, again, like somewhere between around $50,000, give or take. And that's all that's public domain in our SEC documentation. But realistically, like some of that money stays in the bank account for an individual asset. So to operate it, to maintain it, to insure it, to store it, all that's kind of set up for extended period so that we can always maintain that asset and use it effectively too, and put it on display in places and travel with it and bring it to pop-ups and all those pieces. Other than that, I think that we've always looked at kind of what we do as wanting to maintain a commission-free asset. We want to maintain sort of a marketplace that's, again, liquid without sort of having to charge either like on the way in or on the way out. So for us, like maintaining the business right now in such a way that we give access to the best assets, but are not taking money off the top of it in any sort of ineffective way or in any predatory way, is the most important part of what we do right now. So the business operates, again, like we're venture backed. We have a great team around us. We have the ability to sort of make money on individual assets through merchandise and experiences and things that we've been doing really effectively. For us, getting assets into the hands of people and doing that without charging any exorbitant fees or trying to make them sort of lock into a long-term hold, all that's the most important part. We're confident that over the course of, adding 400, 500, 600 more assets to this app and getting all these people, millions of people really excited about it, that the business itself will follow with that. And I think that we're at a point now that we start thinking about the future. It's getting very, very close to doing that.
Speaking of the future, I have to, I'm a crypto person, I guess. I don't really feel like one. Anyways.
I think you're a crypto person. I think I'm like a basic crypto person. Definitely not like a lot of the people I see online, which I think is they're all lying anyway. Everybody makes believe they're an expert.
So much imposter syndrome.
No one can be an expert in an asset that's been around for barely 10 years. You know what I mean? Get out of here. Yeah.
That is true. And anyone who says there is, they are
liar.
Yeah.
It's a liar.
But I have to ask about NFTs, right? So yeah. I think we've seen a huge boom. People think it's a bubble. I think in a lot of areas that is the case, right? There's absolute mania of everyone wanting to get in on this, right? And the ones that you have on Rally, like to your point, are like the blue chip ones, which is sort of funny to say with something so new. I'm calling it like blue chip, but it is true. I mean, these are the ones that have been around the longest, the most prominent, the ones that have like very strong communities behind them that have retained their value over decent amounts of time, as long as NFTs can, over time. But
yeah, decent amount of time, 7 months, 8 months.
Yeah. That's a long time for crypto though, I guess. So
true.
But I guess kind of what's your view on that space, other than, I mean, obviously on Rally, you opened up the market to having those available and making it a little bit easier for people to get involved in that market and not going through the whole process of opening an account, funding the account, transferring that to a software wallet, loading that up on one of the NFT marketplaces, buying it, storing it, the whole shebang. Like, obviously you're bringing that up and you see that there's value in the, more blue chip ones, but where do you see that space heading, like from your vantage point?
Yeah, I mean, there's a couple things. Again, it's one of those things where it's like building for the future versus building for the moment. I think a lot of what you see right now is natural, and it came during the ICO boom, and it's coming now. It came the same situation for 100 years. Like, history doesn't necessarily repeat itself, but it rhymes kind of. And we're in that situation where what's happening right now in this exact moment, which is looked at as a down market, where ETH took a little bit of a deep dive, and, the NFT market kind of followed a little bit. Floors of those blue chip products and the blue chip NFTs kind of, took a 30% haircut really quickly. It scares people out and it shakes people out. And I think that the impetus on like Twitter, for example, is to be like, oh, those are weekends. Like, you gotta shake those people out. But reality is market cycles too. Early adopters are going to make the early rips, and those are the people that are going to also reinvest into the marketplace. That dries up for a little while. You see a dip like we see right now. It just so happens that the currency you have to transact in dips along with those NFTs right now. Bad projects get rugged and good projects stick around, but you're going to have those ebb and flow cycles. So for me, I've always looked at it like, from a creative standpoint, as somebody who's been an artist and a designer my entire life, I feel like it's the best opportunity for somebody who's new to a space and isn't necessarily within the gallery construct and wants to do something unique and build a business around it. So I have like really close friends I've known forever who are just now 20 years into their career, making real money and adding real utility and adding real participation to the projects that they're creating. People that worked in music forever ago, which like working for really important people and big labels, but there was no real money in it, because as a designer, you're not the person going to get any real rewards for the work that you're doing. But now, like, they've always had a great aesthetic. We're never artists in such a way that they would get representation from a big gallery or have a manager who's pumping their art, but they can connect directly with the community they've already built, people that care about their work, even if it's just 1,000 people. The ability to take those people who care about what you do, turn into a project that gets sold directly to those people, let those people do the marketing and promotion on your behalf, and then turn it into a business. That's never existed until now. And that's the biggest sort of driver, I think, of what we're going to see in new projects. Anybody coming out and doing like some nonsense PFP project and like making believe Gary V is part of it and like throwing things all over Twitter and running up scams, like, that's not going to exist anymore. And this rug pull that's happening right now, I think, is a good thing to weed that out. But I'm super bullish on the next, 2 to 5 years, no question, because it's going to find its footing, and great creators and great businesses are going to form from it. It's going to take a little bit of time though, in my mind.
Yeah, no, it definitely will. But to your point, I mean, I always say, like, when I think about crypto as a whole, right? People always equate it with like the internet boom and things. And I kind of think in a lot of ways it is true, where there's always such a high attrition rate in high growth spaces. And this isn't the first time, like to your point, history doesn't repeat, but it rhymes. This is exactly the case there, where, people have tons of interest. They're flooding the market. It's oversaturated. There's going to be a lot of rug pulls. That's unfortunate, but it's just a product of high growth areas where people will inevitably take advantage, or, that's, I wish that could be fixed, but it can't. But on the, I guess for the future of NFTs and really just crypto in general, I feel like there's been this interesting shift, and I'm curious for your take, even coming from like music and more design, and more like kind of fun and artsy side of things. There's such a intersection now of culture and finance that I don't think we've ever really seen before to this extent. And I feel like NFTs really embody that, but I think that that's going to be a trend that just continues.
Yeah, I would agree. I think that the big difference in my mind is that people make decisions for the present. That's just human nature, I think. And that's the reason that, you put your future self in debt by saying, I want this right now. And like, I hope it works out. I think we've seen a lot of people rushing into projects, into tokens and into individual crypto projects and NFTs in the exact moment where FOMO is the only mechanic that leads to a purchase. That to me is what's going to slow down a little bit. And people will just inevitably do way more research because the risk profile is going to have to change because there's supply kills all rallies. So supply of NFT is going to kill the NFT rally. It kind of is right now. But what you get is that flush where people who were just chasing get burned once or twice and then slow down. I got unlucky and lucky in that, like, 2008 was like the beginning of my investing life, and you lose every dollar really quickly during crazy rug pulls. And the internet didn't exist the way it does now in 2009. So it was just like, I guess that's it. I'm never going to make money. Like, that's what it feels like. These kids now have like a different appetite for risk. So getting burned once or twice doesn't make them go away. I don't think they know how to buy dips, and they're really interested in being a part of projects that they feel like have longevity, whether it's a token or an NFT or a new coin or whatever it is. And they're willing to sort of to learn from mistakes in a way that I think I probably wasn't in my generation, wasn't early on. That's what's going to change in my mind. Cause it's just like, finance was a zero-sum game at one point. It's like, just make money. But now it's like, make money, be part of a community. That's the big fundamental difference that I think is going to power the next sort of wave, the next upswing of crypto and NFTs.
Yeah, it's definitely more like a lifestyle, right? It's like more involved in your day-to-day. It's not just putting money in and setting it. It's being super involved in it, caring about what you're investing in. I mean, they always say like younger generations and women, which is not interesting, I guess, but more interested and involved in actually caring about what they're putting their money into rather than caring about the return. Is definitely such a shift. But to your point too, I mean, I guess this is my generation, but there's so many people that started investing in like even the past 2 years during COVID and, sitting at home and not having much else to do. And the appetite for risk and like the psychology of those people is so different than starting out in 2008. And I personally think it would be better to start in an 08, 09 situation, right? Because you're going to be more aware of the risks involved rather than starting in a bear market and thinking you're Warren Buffett. So I'm really curious to see how it plays out, because just from like a behavioral finance standpoint, right? If you've never seen what a bear market looks like with skin in the game, where you're like emotionally tied to it and very invested in like watching it day to day and whatnot, it's going to be a whole different feeling when you don't see it coming, which it inevitably does. Like these are cyclical. So it
always happens. And it's like, again, you're happy belated birthday, by the way. I saw that too. Happy belated.
Thank you.
But you're the generation that came right after me. And it's also a situation where like you understand that nuance where there's a difference. And I think inherently everybody now wants to do the right thing in some capacity and put their money in things they really care about. But the experiential value has always been looked at as like the polar opposite of investment value. So that's why like Tesla, the stock, is always looked at kind of differently than Tesla, the car company. You can kind of like play crazy options and long short strategies and sell cover calls for Tesla and but really like not care about the car company. I think what's happened in the last like 2 or 3 years is that it's all part of one thing. It's Elon Musk, everything he's saying and doing, what Tesla's doing, sending Starlink to Ukraine, like all these elements that come together as part of one investment strategy, that it's like no one's looking at it in short-term swings like they were even 3 or 4 years ago. Tesla is like a lifestyle choice at this point. And that's what has changed dramatically for a new investor in any of these new asset classes popping up, and even some of the older sort of stock plays like a Tesla or like an Apple.
Yeah. And I mean, to your point on like the Elon Musk thing too, it always just reminds me, like the power of social media and the role that plays now with different investment opportunities and just being so in deep on all of these different things. I feel like that has to lend to, it's done really well for like the NFT side of things. There's, again, you're not just investing, you're involved in a community, you're engaging with people that also own an ape or also own a CryptoPunk or things like that. So I feel like, you're seeing that play out in real time, or it's like the mentality of investors is shifting, and also the way that they interact with each other is as well, and a whole bunch of things at once. But it's just been really cool to see, even since COVID started. I feel like that's just ramped up a ton.
Yeah, that the train left the station like during COVID for sure. Everyone had enough time to research a little bit more, and was again, aversion to risk changed dramatically. And that train is moving so fast now. Like you don't want to get in front of it. Like you lose a step if you're not paying attention to what's happening in those social circles. You're not paying attention to like the content that comes out of individual companies. And that's the thing. Like you don't want to step in front of a moving train. So I'm trying to avoid that every single day. Basically, I'm trying to make believe I'm young still to not be in front of that moving train when it stops. You know what I mean?
You're only as old as you feel, as I always say.
That's a fact. Yes, that's true. That's true. I feel very beat up right now. You're right though. You're always as old as you feel.
Never mind. Unless you feel older than you are, then you're just as old as you legally are.
Very true. Very true.
Yeah. But I guess on the side of like social media, really like kind of bringing all of the investment things to like the social side and just having that clash. Have you seen that be as prominent more in traditional markets or in collectibles as well? A little bit of both, I guess, kind of not including NFTs, because as we know, they're so community based. And I feel like that's always been that way and always will.
Yeah, I think it's both. It's things, once they hit the zeitgeist and become sort of pop culture, they're naturally polarizing at that point. So seeing sort of like the open debate on something, again, that was once zero sum, where it's make as much money as possible on something and then get out. Now it's people treat it as part of their identity. You're always going to get that, especially on social. And we see that with collectibles so often, where somebody wants to say like, well, that you see it on social all the time. And it's a little bit negative. It's getting very negative. Hopefully it slows down a little bit. Somebody who, for example, who invests in like baseball cards, and that's their thing, and it's been their thing. But now like tickets, like debut tickets from individual legends, and the first time they played in a game, they're really hard to find sometimes. That's become its own sort of world, but it has its own fans. And those two groups are saying ours is better than yours or yours is better than mine. To me, it's all part of this same collecting philosophy that it shouldn't be as polarizing as it is. But I get it, because this is an extension of people's identity. Like they care so much about it outside of just the money. To say my thing is better than your thing goes back generations and generations and generations. It's hard to see that stopping, and net positive is kind of what it becomes once that public discourse is happening in those individual channels. I'm not against it.
Yeah, it's interesting to watch, at least on the sidelines for me.
Yeah.
But I do want to wrap up, though. I feel like we could keep on this all day. Maybe we'll have you back when we have more non-chicks on the Chicks of FinTwit podcast.
I appreciate it. Yeah, keep me in the non-chick pile. I love to come back and have the conversation anytime, for sure.
I will. We'll see how this all like unfolds with the collectibles and the NFTs and everything. But I always ask people the same thing at the end of this, just because it has nothing to do with finance, and I think we all need that sometimes.
Everything is finance. Everything is finance. That's how it goes.
It's a lifestyle choice. But I guess when you're not, building Rally, when you're not doing all of the really cool things that I've been watching online, not creepily, what do you do in your free time other than that? I mean, you're wearing a Yankees hat right now. I'm assuming sports is part of that, but what else?
Yeah, I mean, it's part of life. I'm trying to find as much life as possible outside of Rally. But as a designer, like trying to write more, trying to draw more, trying to do more of the things that like make me feel like a kid again is kind of what the day-to-day is. And I get lucky that we get to do that here a lot, because so much of the stuff that comes into the office and that, is part of our acquisition strategy is this nostalgia. But you know how it goes, like everybody old wants to be young again. When you're young, you want to like hang out with the old kids and the cooler kids. I'm just trying to find like happiness and nostalgia. A lot of that goes back to like design and trying to do more, like literally putting pen to paper as much as I possibly can.
Love it. Nothing wrong with that. Well, for those listening here too, how can they follow you? Where can they find you? Where can they find more info on Rally and everything that you guys are doing there?
Yeah, so we're Rally on Instagram, on Rally RD on Twitter, and I'm Rob Petrozzo across every platform. But realistically, like, anybody that has any ideas or concepts around what we should or shouldn't be doing, where we should be going, anyone that's interested in anything we're doing, like I make sure my DMs are always open. My cell phone number is like all over the internet. Feel free to reach out direct, because I want to hear from as many people as possible who care about either what we're doing or an asset or a collectible or a thing. Having those conversations is like a lot of what keeps me sort of moving, especially as we start building out all these new asset classes at Rally.
Phone number online is bold, but I respect it.
It's too late. Once it's one place, it's everywhere. That's it.
That's true. You open up the can of worms, but this has been so great. Thank you so much. Really glad to have you on as our first non-chick on the Chicks of FinTwit podcast. And thank you to everyone for listening. We'll be back next week with another episode.
Awesome.